$994,000, almost $1 million for the top 10%. Top 25, $826,000. Top 50%, $743,000. Getting access to funding is actually pretty easy if you have the right data points. But what's more important than even receiving the funding is having a plan on what to do with the funding. Now, in today's video, we're going to be covering franchise financing. Why I like franchise financing is because of the proven business model. It's much easier for, let's say, a newer business owner to be able to get financing for a franchise versus an existing business. And what I mean by that is, let's say me, for example, I want to go get a loan from the bank. The bank is going to base the loan off of the existing business financials. Whereas with a franchise, you actually get approved based off of projected financials. So what does that really mean? If I want to get a loan from the bank, that means I would have already had to establish my business for multiple years, generate revenue, and have documented income. So profit and loss statement, balance sheet, and tax returns. You would have already had to prove to the bank that you're a viable business. However, the benefit with franchises is that they have what's called a franchise disclosure document. So this type of document actually has information on hundreds of different franchise owners within that franchise system. So it's not basing it off of just one location. It's basing it off of hundreds or sometimes even thousands of locations. So let me just give you an example. Now, this right here is an example of what's called a FDD, franchise disclosure document. So it'll tell you what the average net sales are, what the median is. So in this example right here, when we're looking at the average net sales, let me scroll up a little bit. All right, so the average net sales, if you go across here, across all of the franchises in this system, so 924 total, the average net sales, $590,000. The median net sales, again, the median is going to be the midpoint, $561,000. Then you have the top 10%, which is $994,000, almost $1 million for the top 10%. Top 25, $826,000. Top 50%, $743,000. Why this is powerful is because if, let's say, you want to get into business ownership, you want to own a franchise, let's say you're transitioning from your 9-to-5 job, you're not going to have established business financials because you don't have a business yet. But with a franchise, they're not going based off of what you've already generated. They're going to use a lot of the information that's contained in the FD because they already have data on 924 franchises within this system. And this is going to be from the previous year. So every year they compile this huge document, which has all the latest sales information. So you're almost piggybacking off of a lot of the other franchises within that system. You're piggybacking off of their data to be able to go into the underwriting. So that's the powerful thing about franchising, is that it's actually easier to get access to a loan. Let's say if you're transitioning from a 9-to-5 job, you want to open up a franchise. So as part of the underwriting, yeah, they're going to look at your personal credit, your net worth, liquid assets you have, but they're also going to incorporate the projected financials. And this is going to be based off of the information that's in the FDD. And a lot of times the franchisor will provide the projected financials that go into your loan application. And then the other great thing about franchises is that once you get that first unit stabilized, you can actually leverage it through what's called cross collateralization. So once you have a stabilized franchise unit, you can use that to then open up additional units. Usually after about 3 years in business, you can then basically leverage that first unit to then open up 2 or 3. Now in today's video, I want to go over some of the top lenders in the space. So I have right here 4 different lenders within the space. I'm really going to focus on the top 2, which are BoeFly and as well as Apple Pie Capital. All right, so for those who don't know BoeFly, they do asset verification. So before you're able to sign a franchise agreement and move along in the process, so usually what happens, you express interest, they'll send you an FD, you can review that, and then the next step after that is when you go through asset verification. So basically they want to make sure that you actually are able to financially support a franchise. So what they'll do is they'll verify your income, your liquid assets, your net worth. You might have to send to them brokerage accounts, mortgage statements, appraisals, bank statements, stuff like that. Now, pretty much what BoeFly does the verification, they'll collect a lot of the information. So they actually have integrations with Plaid where you log in, they see what your bank balances is, just so that they know, okay, you're a serious candidate for one of these franchises. Right here, asset asset verification, credit check, background checks. They basically just want to know that you're actually qualified to take on this type of business endeavor. Aside from that, BoFly actually does have a parent company. Now, as you can see right here, let me zoom in a little bit. So back in 2019, a bank called Connect One Bank actually acquired BoFly. So even though BoFly is not necessarily a financial institution, it's a fintech company, but they're basically the asset verification arm of it. Whereas their parent bank, Connect One Bank, actually is their in-house financing. So BoFly has a marketplace of other lenders that they work with. They also have a parent bank that also can provide loans to these different franchisees among the franchisors that they work with. Connect One Bank is the parent bank to BoFly. So this is their in-house financing. I wanted to show you this, right? I don't know if you guys are familiar with this gentleman right here, but a couple months ago, there was an interview by a really popular YouTuber, Say Cheese, where he interviewed this gentleman right here about his experience as a Smoothie King owner. So he owns 4 Smoothie Kings, I believe, in like the Dallas, Fort Worth area, I believe. And very interesting. And it's so funny that he's actually on the front cover of a BoFly, right? You guys could definitely check that interview out. Very informative. Again, asset verification and in-house lending, and their parent bank is Connect One Bank. I also wanted to go over Apple Pie Capital. Apple Pie Capital is a big player in the franchise financing, and that's all they do. So if you're looking to acquire a new franchise, or if you're looking to buy an existing franchise, you can go through Apple Pie Capital. They have a network of brands that they work with. The thing about it is that the underwriting criteria is going to be slightly different depending on what brand you're going with. So if you're among their 200 plus trusted brands, so all of these brands right here, Jimmy John's, Jersey Mike's, Sports Clips, Little Caesars, Nothing Bundt Cakes, Scooter's Coffee, Orange Theory, they're all within the Apple Pie franchisor network. So the great thing about it, because they're already originating a lot of loans with these different brands, they're very familiar with their business model. They're very familiar with their projected financials. The underwriting actually is a little bit, I would say, easier with the brands that they work with versus if you want to get financing for, let's say, a lesser known brand or a smaller brand, it's a little bit different, right? So there's a difference between established brands and emerging brands, meaning maybe they only have 10 locations, 15 locations. They're not nationwide yet. So those are emerging brands. Those carry a little bit more risk. So that's just one other thing to keep in mind. So going back to Apple Pie Capital. So they have their own loan product called the Apple Pie Core Loan. Now, Apple Pie on the back end, they are actually sponsored by Cross River Bank. So that's their sponsor bank. But then they also are able to do SBA loans and other equipment loans through their network of lenders. So that's just one thing to think about. You have in-house financing and then you have the third-party financing. But as far as the Apple Pie Core Loan, so whatever the total project costs are to open up your franchise, you could actually put as little as 15% down. I would always say expect to put down 20%, but depending on the product, with SBA, you can get as low as 10%. With this Apple Pie Core Loan, this is going to be, again, for qualified brands where you can get as little as 15% down. Now, it's a little bit of differences between this versus SBA 7A. As you can see right here, personal collateral is never required. Whereas with the 7A, depending on the amount, you may have to pledge personal collateral, right? So you might have to put up your house or any type of personal assets. Another difference is, as you see right here, qualified brands. So the brands that they work with, the SBA loan, you can get qualified for most brands. So this is going to be more flexible as far as the brands that you can work with. But as far as the brands that they work with, you can qualify for their core loan product up to $5 million. Maximum lifetime funding, 20 million. These are going to be 10-year notes. Another big difference is that these are actually fixed rates. As you can see with the 7A, loans are actually variable. And what I mean by that is, think of the 7A loans almost like how revolving lines of credit work, right? So whenever the Fed funds rate goes up or down, the Wall Street Journal prime rate or the bank lending rate moves in lockstep. So if the Fed funds rate is 5%, the bank prime rate is going to be 8%. With the SBA 7A loan, what happens is, let's say the rates go down, then during the next quarter, they'll readjust the interest rate based off the current market rates, right? And whatever margin that they might be charging you. So it's almost like if there's such thing as a variable term loan, that would describe what the 7A loan is like. So it's not fixed forever based off of when you got originated, but with the Apple Pie core loan, it is a fixed interest rate. So the rate's never going to change throughout the duration of that 10-year note. So that's just one thing to keep in mind. Now, there's two other financing sources: Macro Lease, which offers working capital, and their parent bank is Brookline Bank. And then there's also IRH Capital. They offer franchise acquisition financing. I'm not going to go too deeply into that. I did drop a more detailed video on the Patreon if anyone is interested. But for this video, I wanted to focus really on BoeFly and Apple Pie Capital. Now, what I like about BoeFly is that they give you a lot of materials to prepare you, including what to expect, giving you an overview, and then even helping you prepare your loan package, right? So there's a variety of different forms you have to fill out. If you're going the SBA route, you have the SBA 1919. You also have the 413 personal financial statement, financial projections document. You also got the early stage business plan. You have the full business plan outline and a debt schedule template. They also have the liquidity and net worth attestation letter template. Now, some important things to know as far as just general qualifications. As far as credit score, most lenders are going to require at least a 700 FICO across the board. And I would say you should probably aim to have an even higher score than that. I would aim probably to be closer to 750 and above 800 even. Now, as far as equity injection, as I was saying, 20% is the norm, right? That should be the minimum expectation. So don't go into acquiring a business or starting a franchise thinking you're just going to put 5% down. Another super important component, and this is where I say that franchises have an advantage, right? So a business plan and projection, a business plan and pro forma projections will be required for your loan application. These documents show the bank your preparedness to run a successful business and pay back the loan. All right. And BoeFly actually offers templates for you to fill out that information. As a matter of fact, all right, so right here is a template that you could fill out that has project costs, and they even have a tutorial video that basically walks you through how to fill this out, the profit and loss statement, right? So this is going to be the projections. So usually they want to see 2 years out, right? Sometimes even 3 years out. So right here it says, please reference item 19 of your FDD. Please reference item 6 of your FDD. So as I was saying, as far as the cost and everything like that, a lot of this information can be referenced in the franchise disclosure document. So a lot of this is already going to be provided to you, and the franchisor can actually provide a lot of this information to you as well. So again, that's another advantage I would say as far as franchising, is that you can leverage the projected financials as well as your good credit, your net worth, and your liquidity to get a loan with as little as 10% down. You should expect 20% down. But again, this is going to be a lot easier for, let's say, those who don't have prior business experience. If you're just coming from a 9-to-5 job and you want to plug into a proven system. The other thing I would say with franchising is that it's probably going to be easier than building your own brand, because you can leverage the brand name recognition of these franchises. That's one of the main benefits of plugging in with them, because you already have an established brand and there's brand awareness. So you're not reinventing the wheel, so to speak. Maybe you're just opening up that new franchise in a new market. That gives you an opportunity to get in on the ground floor. You have processes and systems in place. You have training in place. And then as the franchisee, you have the support of the franchisor, because they obviously want to make sure that you're successful and having that quality control. So there's a lot of support when you go into a franchise system versus trying to start it off from scratch. So again, this is not financial advice, but I just want to give this information to anyone out there who might be considering this, making that move. It's definitely something you can check out. I've dropped some links in the description of the video. That's all for today. Until next time, take it easy, and we'll talk to you soon. Peace.